Good morning, friends and fellow traders. This is Doug Campbell with Right Way Options, and this is the Morning Market Prep video for February 14th, 2024. Happy Valentine's Day, everyone. Hopefully you remembered your significant other. If not, you probably got a few minutes to run out to a convenience store and see if you can find something. Be careful, don't get yourself in a doghouse. Let's take a look at what happened overnight last night. First off, we had Asian markets. Now remember, we still have some Asian markets closed due to the lunar holiday, but most of the Asian markets saw declines last night after the hotter than expected U.S. inflation data, just kind of following the U.S. a little bit. If we take a look at Europe, Europe's not following here this morning. As a matter of fact, they are edging just a little bit higher because the UK put out inflation numbers this morning that held steady at 4%. So it's unchanged, but they viewed that as a good sign for UK, and they're trying to edge just a little bit higher, modestly higher in European markets across the board. Here in the United States, we're also trying to move up this morning, trying to shake off that bad data yesterday and push back up here just a bit this morning. So we're looking at a bit of a gap up, but not major here this morning so far. And remember, this is very early. We still have a lot of earnings and data coming our way. If we take a look at oil now, oil just slipping slightly negative here this morning, just flattening out just a little bit. It's been up a little bit, it's been down a little bit. Now it's just kind of flat here this morning. So keep an eye on that ahead of the crude number today. And then if we look at bonds this morning, well, bonds easing back just a tiny bit after rising so strongly yesterday. The 2-year bond is at 4.61%. That's up 47 basis points in the last 30 days. 10-year bond is at 4.29, which is up 35 basis points in the last 30 days. And the 30-year bond is at 4.45%, creating that pressure here in the market, and obviously disappointing the market yesterday that rate cuts would soon be coming. And that's creating a little bit of a concern and maybe a reevaluation of prices in the market. So what does all that mean for today? Well, how about we settle in, buckle up, and let's get ready for the Wednesday edition of the Morning Market Prep video. Good morning once again, everyone. Thank you so much for being here. I very much appreciate it. I hope you all have a fantastic Valentine's Day and a hump day here. Let's take a look at some of these charts and see if we can figure out how we might want to approach the market for today. And keeping in mind, we want to shake off our bias here in the market and just take a real close look at what's going on. If you guys remember yesterday, I said raise those stops, be careful, because there were chances, and I've said this for the last few days, that there was chances of some big point moves in the market. And holy cow, did we get it yesterday. Dow going down 700 points at one point, bouncing back up, still down 500 points. But you can see we kind of shook things up here in the market. If you take a look at the diamonds, breaking this trend in the market. So as we rally back here in the market, we're going to want to watch carefully for this resistance level in the chart. As we rally back up, what we don't want to see, if you're a bull anyway, if you're a bull in the market, what you don't want to see is if we fail at some kind of a lower high. If we come up here and struggle, that's how a top gets created, if we struggle in here. So let's watch that carefully. Just keeping in mind, these are still some very big point moves that are going to have to be accomplished here to get us back up to this level. So if those bulls can push through this morning, look at that area as the price resistance in the chart. If the bears were to happen to find additional inspiration today, well, let's just take a look right down in here, that possibility that we push back down, test that level of price support down here in the chart. And then, of course, there is that tail that we could retest of yesterday to retest that low. And then if that were to fail, then maybe back down in here on that chart in the diamond. So keep a close eye on that. Now, if we take a look at our SPY, SPY, pretty substantial gap lower, and you can see we're trying to pump it up here in the pre-market to get something going. So first thing I would do is I would look at yesterday's topside wick up here to see whether or not we could push up through that area of the chart. If we can, then let's start looking at these areas up in here to see whether or not we can push up, test some of the underneath side of these candles, and then pushing up into here. Remember, we ended up with a shooting star in here on Tuesday, so we do have to question any rally back here. As we push back up, we could run into some resistance in the chart and then roll back over. And again, that really wouldn't be a surprise. But the good news here for the bulls is that we really didn't break this trend. We kind of held on to that trend here in the chart. If the bears were to find inspiration, well, the first thing we'd look for is maybe a pushback to test some of these support levels in the chart where we bounced yesterday. Maybe right in this area of the chart, see if we can hold that area. And if that were to fail, then of course we're going to be failing trend, and we're going to start looking at some of these lower levels possibly in the chart to test them as support. Breaking on down through something like in there, we're probably coming back into that level right here on the chart. If we take a look at our QQQ, obviously QQQ, very similar, trying to bounce back up after holding on to trend there yesterday. We'll be pushing up and trying to gap back through this resistance in the chart this morning. So watch that carefully. If we can hold through there, then we start looking up here at some of these candles and seeing whether or not we can push on through. We got quite a push to get all the way back up there to the top side. Certainly is possible, but it's going to take some work here, and now we just have that uncertainty of not as many rate cuts as everyone was planning for, which means we have probably pushed stock prices too high based on those numbers, realizing that mortgage costs are going to be going up and everything else as a result of those numbers yesterday. So if the bears were to find inspiration here, well, probably the first thing after this gap up this morning is see if we hold that support level in this trend. If we were to give that up and push back down through here, of course, that's going to raise some concern in the market, and then we start looking for a retest down here in the QQQ to see whether we can hold that level. Passing through that, you can see these levels in here. We've got some pretty good support levels right in here, and breaking down through there gets really painful, and we probably come back and we test some of these areas here. Let me pull this all the way back. We start testing some of these levels down in here in that chart as we approach that all-time high breakout of 2022 to see whether or not those areas will hold. If we take a look at our IWM also had a rough day yesterday, pushing down, breaking back down below this price support level in the chart. But you can see this morning we're already trying to pump it back up. One of the things the market has the capability of doing right now is we just have an amazing capability of ignoring bad data. And so we're trying to shake it off here this morning in a pretty strong way. So if we can continue to push here in this bullish move, then look for a test of that high point of yesterday's candle. If we can push through there, then I'm going to suggest we're going to run into this bigger area of price resistance in the chart. Watch that area of the chart. Then, of course, maybe up into here to test that if we can continue to push on through. And then keeping in mind, if the bears were to come in with some inspiration here today, pushing back down, first off, let's see if we can hold this support area of the chart, and if that were to fail, I'm going to suggest we would push on lower, maybe down here retesting yesterday's lows, and beyond that, of course, well, you can see where we go, probably down into here and then on down into here if those bears find that inspiration. If we take a look at our VIX, well, our VIX rallied substantially yesterday, closing much higher here on the day. Ended up closing up about 14%. On the day, breaking through significant resistance levels as that fear spiked up. With the gap up this morning, I would look for that to pull back. Remember, anytime we surge like this in the VIX, it's not this move that is the one that's majorly concerning. That's the shock move. The move that will be concerning is if we pull back and we hold a higher low, and then we see that fear coming back into the market. So watch that carefully on the VIX if we do hold those levels. If we take a look at our T2122, well, my goodness, this probably gives us that best look of the bounce back up, because we went yesterday from completely overbought a day ago, completely overbought, to taking it all back, and we were oversold down here earlier in the day on the market, and we did get that bounce back up. So looking at this, if we could see why we're getting a little bit of a relief rally here this morning, if the bulls can find lots of inspiration today, well, we've certainly got a big upside opportunity that we can push back up. If the bears were to find inspiration, not so much in that potential move down, but we're talking about some big points. We're talking about 200-300 points easily if those bears were to push back down and just test some of those yesterday lows. So we're talking about some huge point swings. So remember, guys, be really careful here, and be careful with this idea of just rushing back in, that everything is copacetic here, because it is not. In the market, we're going to see rates higher, and if you took a look at that number yesterday, let me throw that up. That number yesterday here in the NFIB Small Business Optimism, this was a horrible number. This is about a 3-year low in small business optimism. So small businesses aren't happy, and they're suggesting that things aren't as good as what the market is suggesting they are. So just keep in mind, we've got some big point moves that are still possible in the market. It might be better to just kind of slow your roll just a little bit, wait, be patient, let this kind of settle out a little bit before you get real active in jumping right back into the market. If you take a look at T2108, our T2108 clearly had a rough day yesterday, but it wasn't awful in the sense that we still held on to some price support here in the chart. So bounce back up would be nice here in this, or relief rally would be nice, just keeping in mind we've created some fairly significant levels of price resistance. So any rally back up, we'll want to be watching for that next problem here in T2108, and that percentage of stocks above the 40-day. If we look at T2107, percentage of stocks above the 200-day held up pretty well. Notice that we didn't quite break that support here in the chart, pushing back down toward that 50% area of the chart, but obviously kind of a nasty little reversal. So watching this for that relief rally as well, some bounce back up, and just kind of keep in mind we're creating resistance levels in the chart here that we'll want to be watching carefully as we rally back into those resistance levels. And then if we take a look at our T2101, this is actually kind of surprising. I wonder if the institutions, if the big tech giants and things like that use yesterday's pullback as a reason to do corporate buybacks, because what was interesting here on that big drop, we didn't see a big change in breadth at all. Typically, you would have seen on a day like that that breadth would have really picked up in the market because of all of the activity here. But notice we did pull back here on our breadth just a little bit, even as we bounced around heavily, big point swings in the market. So we're going to still want to watch this closely, see how this plays out. What we don't want to see, if you're a bull, is we don't want to see bearish wave starting to pick up here. We want to see a bullish wave picking up that and moving that higher. So watch that closely. If we take a look at our economic calendar for today, our economic calendar, well, we've got a few things to be paying attention to. First off, we're going to have mortgage applications here this morning. Watching that carefully. Remember, yesterday's changes will not have had any impact on this number at all. So these could still be bullish for the market, bearish for the market. Anything is possible there. Remember, we're going to have some Fed speak here today, and of course that might be a little bit sensitive just because of yesterday. How they speak today could be interesting, so pay attention to that. We've got petroleum status here today. That, of course, will be very, very important to the oil prices here, depending on whether or not there's build in supplies or decline in supplies. And then, of course, we have a 4-month bill auctions, which will, of course, be interesting just because of those rate changes that we're seeing. Now, keep in mind, as we get through today, then we've got a huge day here on Thursday. Jobless claims, retail sales, Philly Fed, Empire State, import exports, industrial production, business inventories, housing market index. So we've got a busy day here. And then after we lick our wounds from this ugly CPI report, we're going to go into a PPI report on Friday. So be prepared for this volatility to continue and that uncertainty in the market to be there. So once again, be careful just racing right back in and trying to buy everything right back up. There may be some more whipsaws here in the market easily as we push around here. Let's take a look at our earnings calendar here for today, and our earnings calendar is pretty busy. We've got quite a few reports here this morning. I can't cover them all, so make sure you click the link below the title of the video. That'll take you back to the morning blog where you can catch that full list. Just cover a few of them here this morning. One of the most notable is going to be Cisco reporting after the bell today, so keep an eye on that. We'll be hearing from APP. We've got CF Industries that will be reporting. CC will be reporting here. We're going to hear from Energy Transfer. We're going to hear from HLF. So keep an eye on that. We're going to hear from the Frog. Frog will be reporting today. LAD is on the list. We're going to hear from Owens Corning. We've got SUN, Sunco, that will be reporting. TWLO will be an interesting one to watch this afternoon. And last but not least, Wyndham Hotels will be reporting. So quite a few here to make note of, some notables in there that have that potential to move the market. So make sure you click that link and get that full list of notables for today. Let's take a look at some stocks that could be setting up. But before we do that, guys, if you could do me that quick favor, if this is the first time you've seen these videos, if you could please click that subscribe button on YouTube. Also click that bell icon when it pops up so you'll be notified every time I post a video. And if you find these videos to be useful or helpful, if you could do me that favor, and that would be click those thumbs up buttons, leave a brief comment. That helps the channel to continue to grow. I apologize yesterday. I didn't get to those and answer. I had a major technical problem yesterday with my computer. Just, oh my goodness, it took me forever to get that fixed, so I didn't get those comments answered, but I'll be back on that task this morning. So thank you so much for everyone who takes the time to do that. Let's take a look at some of these stocks, and let's keep in mind, guys, these are not recommendations to buy or sell any security. You need to do your own due diligence. Be very, very careful, and never ever blindly follow anyone else's trade ideas. Follow your rules, your guidelines, and your risk tolerances. Now let's take a look here, and please keep in mind, any stock that we look at today could have more cost And if you're an options trader, more cost because of the implied volatility change of the market yesterday and the fluctuations that we're seeing in prices. So keep in mind, if you're an option trader, pretty much every option that you're going to pay is probably going to cost you a little bit more in that extrinsic value, the time value of that option, which means you give up just a little bit of edge on that because you'll have more decay rate in those positions. So be very, very careful. And as I said, it may be better to just let the market calm down here before you jump into trades and chase right back in. So first off, one that held up really, really well here is Tractor Supply, looking good here overall in Tractor Supply. Now yesterday it pushed down, but notice it came back up in here. This is going to report on 425, so plenty of time on this one. Watch that carefully in here, holding that price support. Placed a price alert on there for that upside potential. I'd watch that carefully. Walmart had a pretty rough day yesterday, pulling down sharply. Still in that bullish pattern, however. You can see a little bit of bearishness here this morning on in the pre-market on Walmart. But if we get this bounce back, if this holds in here, watch for that next opportunity. This is going to be reporting on 220. Every reason to believe that this could potentially stretch on higher heading into that earnings report. So keep an eye on that. URI also, this was all set up here, popped through that area of the chart, and then we saw that number yesterday come in and gap us lower. But keep in mind, with the volatility that we're seeing, this could still hold this support in here and push right back through to the upside. So watch that carefully. I like the way CLF pulled back and still got hit pretty hard yesterday, like everything else, but it pulled back and it held onto this trend, trying to bounce back up. So we are seeing a little bit of steel trying to hang in here and get something going. So if we hold in this area, remember this area here still has that opportunity that we can chop around in here to come out to trend before we build that energy to go. But keep an eye on CLF. Maybe have some potential in here. You know, I know no one wants to hear these kind of things, but you may want to start keeping an eye. None of these are buys yet, but if we're going to start getting a little bit more volatile, a little bit more on the bearish side here, take a look at this, where we've got this double bottom formation here on the triple leveraged bear on IWM or the Russell. And you can see if we were to break this downtrend in here and hold a higher low, then we start looking at some of these stocks for those inverse ETFs here in the market. They're not ready yet. SQQQ, that selling yesterday, gapped this substantially higher. I wouldn't be rushing into these at all yet, but if we were to break those downtrends and hold those higher lows, that's where some of those prices could come in and could be pretty interesting to be paying attention to if we start to see that failure occur in the market. Keeping in mind, guys, I had mentioned to members of RWO, in fact, we put on a ratio spread trade here. I offered up a ratio spread trade anyway to folks in RWO for Apple, creating another lower high here in the market. And this was a failure of its 50-day moving average. So please keep in mind that there are stocks out there starting to show some relatively bearish patterns developing here in the market, that everything's not just what you'd like to think it is, that it's all bull all the time. We're running into a little bit of problem here in some of these places. Now, that doesn't mean that they all are. If you take a look at AMD dealt with yesterday as if, well, nothing really happened. It gapped down and pushed right back up. As we continue to fight in this wedging pattern here in AMD to see whether or not we can push on through. We will want to keep in mind that shooting star right here just on Tuesday. We pushed right back. If we push through here and hold a higher low, well, then we've got that upside potential. But remember, if we push up in here and show that failure again, could just be that that period of time that we finally break some of these support levels in these charts. So make sure when you look at these charts, look at the charts for what they are, not for what you want them to be, and be very, very focused in here on these price patterns. Take a look at TEVA. TEVA went yesterday as if nothing happened here in the market, continuing to move up strongly here in this chart from this alert. Any rest or pullback would set up more opportunity there in TEVA. I'd watch that closely. You might want to take a look at Plug Power. Now, Plug is not for everyone here. Kind of a cheapy guy. It moves in big percentage moves in the market. You can see it's trying to come right back up here in this chart. I'm watching Plug Power for that opportunity that we could hold this downtrend break, hold that higher low, and start pushing up. And I'll be actually looking at this for maybe a longer term position for a major comeback here eventually in the chart. But it looks like we're starting to gain a little bit of support. Now that doesn't mean it takes off right from here. This could rest. This could bounce around underneath this resistance for a little while. The better trade in here is probably going to be when we push above there and hold. As a matter of fact, that's where I'll start adding to my small position that I'm in right now, if it can push through that level, and then I'll be starting to pick up some Plug Power. So something like that to watch. Still think IBM is still setting up. Yesterday, little tiny pullback, pretty much acted like nothing happened here. So I think there's still opportunities to watch and pick up a chart like that. Now, stocks that were heavily affected, like MU, any rally back now into resistance here in MU sets up that short opportunity. That shooting star up here, gapping us lower, hit some resistance in the chart, and then I would be looking for those short moves to the downside. And there are short trades out there, quite a few short trades in here. Take a look at WBA, continuing to show that bearishness here, pushing down in the chart, rolling over. And that possibility that we could move right back on down and test some of these lows here in WBA. So there's quite a few charts like that that are showing those signs of stress here in the market. Shopify, big hit yesterday. It was rallying nicely on that breakout, came all the way back, broke the support here in the chart, left a big old shooting star pattern in here. But if this can hold in this support area, bounce around and recover, then there still may be that opportunity to the upside. But I would be watching this carefully after that big hit yesterday, that we would rally back and show that possibility of failure. So just make sure you look very critically at these charts if you decide to jump in to any trade. Be very, very careful here in the market. There is likely going to be a lot more whipsaw going on here, and you do want to remember that we've got a lot of data coming our way Thursday and Friday that could add to that uncertainty. So be very careful how you approach this market. I want to wish you all a fantastic day. Thank you so much for being here and listening. I truly appreciate it. Be safe, be careful. We'll see you right back here bright and early Thursday morning. Have a great day, everyone.